What's up, guys? Yesterday we got a clean move, and look at the time where it happened, 1 p.m. New York. Yesterday we talked about how FOMC was going to be the catalyst that moves the markets, and indeed this is how news plays into crypto as well. And so far we have currently broken out of the range, and this is the exact scenario that I was telling you guys to keep in mind yesterday. The fact that you were in a range to potentially look for a rejection off of this block right here during the New York session, although we didn't get the reaction. And so ultimately, when you are trading in a range, the reason why ranges screw up so many people is not because of, the conditions itself. It's more of like people are expecting the markets to trend, but then it ends up just chopping around, and the expectations and the reality are misaligned, and that's why a lot of people get screwed. But in this case, the fact that we have identified that it's in a range means that we want to look for the opportunities either at the range highs or at the range lows. This can either come in the form of a breakout, or it can come in the form of a range deviation, and you deviate back to the other side of the range. And same thing here, it can either go for a breakdown or you deviate back to the range highs. And that's exactly what I'm going to be discussing today. I'm going to give you guys the breakdown on exactly where to take a trade today, also give you guys the breakdown on where we are in terms of the higher time frame. Before I get into it, bootcamp starts in 5 days. If you're sick and tired of spending so much time and energy learning how to trade but are seeing nothing for it, and you want to get funded within the next 45 days by working with me one-on-one, we have 2 spots left available for the next intake. We've already seen amazing results from the first and second intakes, and if you want to be a part of the third intake, then book a call below on the first link in the description box below. Otherwise, let's get into the video. So just to break down what's currently happening, let's start off on well, I don't think we need to talk too much about the weekly chart. To understand what's truly happening on the higher time frame, we need to start off from the weekly chart. And so far, the exact scenario that I've been talking about that we wanted to see is happening so far, where we want to see price sweep below this low, but then do not close below it. Just to give you a fun fact, price sweeping below this low here and closing above it was the exact signal that we needed to go for a long the very next week for either 3 to 6 hours. And the sweep above this high, but a failure to close above, was the signal that gave us to go short. And similarly, if we want to go long on crypto, if we do not want crypto to just fall all the way back down to 70,000, then the signal is that we want to see a weekly close above this level right here at 76,600. So far, this reaction is exactly what we want to look for, and I'm super happy for that. But we are not out of the water yet, because if you take a look at the weekly chart, you will see that we're currently trading within this bearish order block at the moment, which means that until you truly break above that block and close above it, you cannot truly say that Bitcoin is bullish yet. We're just bullish temporarily, as in today, maybe tomorrow. Although the other thing to keep in mind is that at least on the weekly chart, the structure is very bullish. And when you are in bullish structure, or more specifically, when you are in bullish order flow, bearish order blocks tend to get disrespected. So, do we anticipate this? Well, the lower time frames are what's going to give us that answer. Now, one thing's for sure is that on the daily chart, so far, we are still within bearish order flow. You can see that we have been in bearish order flow ever since the middle of January, where that's your order block, you break below, and then boom, you form a new order block, you break below, you come back up, boom, you break below again, and you form a new order block. And currently, this is the order block that you currently got rejected from, this one that we've been discussing for the past 4 weeks. And we talked about the scenario, how until you break above 95,000, basically, any pumps should just be treated as a retracement for further continuation downwards. Now, same thing here. Now we have just validated a new order block, which is from here to here. Now, some of you can be quick to point out the fact that this is also a valid order block, and you are correct. So all of these are valid order blocks, but for now, let's just mark out the most recent one so that this is going to be more relevant to what we're trying to do at the moment, which means that at least on the higher time frame, even though the lower time frame is looking very bullish, and chances are we might be looking for a long today, the higher time frame, just to keep in mind, is very bearish at the moment because of the bearish order flow. And so right now you're trading straight into resistance. Take a look at the weekly, you're also trading straight into resistance. And so keep in mind that whatever long ideas that I share later on in the video, keep it with a grain of salt. And also we are going to discuss kind of like a bearish scenario where we can take advantage of this. So first of all, I'm going to mark out these liquidity points right there, as well as the fair value gap that exists above this level right here. Going to mark it out as a fair value gap, and that is going to be one of the key levels that we're going to pay attention to as we head into the New York and the London session. Just to give you an idea, I am recording this video right now during the Asian session at 10 p.m. New York. We've already established the fact that this is a bearish order block, and now let's look at some bullish examples. This is all going to make sense in a bit. on how we're going to use this. Now, just to explain what I mean when I say that we might be looking for a long is based on the previous candle close. Usually when we get a bullish candle close, as long as we have enough reason to believe that it's going to go up, the second day, usually about 75% of the time, tends to be a continuation day. This is known as a signal day. This is one of the at least for me, one of the highest probability setups that I tend to look for, which is instead of trying to predict when these aggressive moves will happen, I'll wait for these aggressive moves to happen. And this gives me the signal, right? For example, when you get a big bearish candle, next day, usually you target bearish continuation. Same thing here, bullish candle, you have bullish continuation. Just purely based off yesterday's daily close, I will be leaning towards taking a long, but this is highly dependent on what happens during the London and the New York session. Now, just to give you an idea, today we also have news, but it's during the New York morning. And this is a good sign, which means that there is going to be volatility today. And so just to explain the thought process of why I drew out this beverly gap here, as well as this beverly gap here, I do expect that today price is going to reach towards 84,700 to about $86,000. Why? Because today has news and it's going to be volatile. Secondly, we got a bullish daily candle close yesterday, which means that today we look for continuation. Chances are, right now, as of the time that I'm recording this, it's almost going to be 11 p.m. So we're about 3 hours out from the London session. And if you start forming a low here during the London session, then boom, London's going to sweep the Asia low, fill in some kind of higher time frame key level, and then start heading up. If that happens, then what you're going to get for the profile today is a New York continuation. So this is going to be the New York open. You might retrace into it and then boom, right? The rest of New York, especially after news, you're going to head towards that fair value gap. That, at least that's the scenario that I'm eyeing right now, based on yesterday's daily candle close, also based on this higher time frame key level here. Like, and just to explain why I'm not like looking to go short immediately, just taking a look at the lower time frame here, I'm not seeing any kind of reaction that would suggest that, we're just about to head down right away. I wouldn't even know like what needs to happen. Like probably something like this would need to happen in order to basically, you could say it's probably something like this, but even this is kind of shaky. And the reason why this is shaky is because you did not form a swing low back here, right? This is the only swing low. And so this becomes a higher high. This is technically a higher low. And what needs to happen in order to be bearish is that first of all, you need to form a lower high and then you need to form a lower low. But then this is only the first lower low, right? Usually to confirm a bearish trend, you would want to see 2 lower lows. So yeah, again, as of right now, the fact that, I can't really point out, a bearish situation, like, yeah, this could be the bearish situation. Probably the most bearish situation would be price breaking above this high, but then closing below here and then validating that as a previous, bearish order block and then just heading downwards. And then your target's going to be, 75,000 by the end of the week or something. Just to give you an idea of why we're discussing bearish and bullish scenarios, if we don't like to, as a trader, it's your job to, map out multiple scenarios. Of course, you have a bias towards a scenario that you think is more likely to happen, but you also want to be prepared for, a scenario B, a scenario C, because trading is a probabilities game. It would be stupid to assume that, you know everything about the markets and that whatever you think will happen, will happen. So it's always best to prepare for multiple scenarios so that you can read and react when the scenario does happen. So again, just to explain my thought process, as of right now, right, during the Asian session, I do not see any indication where this could be bearish. And so that's why I'm leaning towards the bullish side. And the conditions that must be met for the bullish side is that sometime during the London session, you want to see a low being formed within this fair value gap. You do not want to see London, start chopping downwards. That is going to be a bearish sign. And then secondly, after London forms this, because today you have New York news, ideally you want to see some kind of a broken base where this is your liquidity sweep, you somehow break structure, retrace back into this block right here during the New York morning session where you have news, and that's going to be your trade idea heading all the way up to 84,700. And lastly, do not forget the fact that we are overall still in a bearish direction. The only reason why I'm leaning bullish today is because we had a bullish daily close. Also, I have reason to believe that price might retrace to a higher retracement level before we go short. Namely, right now, the fact that you're so close to these two relatively equal highs here means that probably you're going to sweep these highs first and then target a relatively equal lows down below there. So hopefully this gives you a really clear idea on what to do for the day. We've been pretty spot on so far over the last 5 weeks, and I aim to continue keeping this streak up. And again, if you're interested to work with me one-on-one and get funded within 45 days, and that is not a false promise because we have had exact students from the first intake who have managed to do just that within that time frame, then click the first link down below and book a call. Otherwise, subscribe because I will be doing more of these analyses every single day, and I'll see you tomorrow for the next one. Bye-bye.